Welcome back to my YouTube channel, and today I will cover four major things in this topic of today. And the things I'll be talking on majorly in this video is the best forex pairs to trade, the best time of the day and the best time frame to trade, and the kind of strategies that you can use that you want to use. Then lastly, on how to manage your risk and on your psychology. The very first thing I'll talk about is the best pairs in forex trade. I won't say there is one particular best pairs to trade. It depends on the trader's point of view. Every pairs has its own characteristics, the way it moves, the way it behaves. So I pick the ones that I know. Okay, this is the best for me to trade. So how do you determine the best of these pairs to trade with? So I look at their movement. That was the first thing I did. I look at how they move. Are they, because some pairs tend to move in a trending manner, and some the trend doesn't stay that long before it starts ranging or maybe change the direction or something like that. But some of the pairs, their movement are not well defined very well. That is how you can determine the best currency pairs for you to trade. Nobody can tell you, okay, this is the best. It depends on your trading style, your trading strategy, and the way you view the market at large. So for me, I choose the GBP USD and I choose the gold for because they suit my way of trading, they suit my personality, and they suit the way I view the market. That's the only thing I can say on how to pick the best currency pairs for you to be trading. The second thing I'll talk about is time of the day. The time of the day is also very important because I'm in Nigeria. The period at which the London session will open and the New York session will open are within my active hours, not when I'm sleeping or not in the night or in the middle of the night. So that is one thing about trading. You have to know, okay, this pair you are trading, when is the best period at which this pair performs the most? So it's going to be, okay, during the period I'm sleeping, that is when this pair perform the most. Then you have to know, okay, you have to have some sleepless nights for you to trade. So the best thing is to look for when you are active, the pairs that are moving well when you are active, not when you are sleeping. The second thing pertaining to time is the time frame. And this is where people will now define themselves to be I'm a day trader, I'm a swing trader, thereabout. So because the time frame they use help determine when their setup is going to happen and when they are going to enter a trade and when they'll be leaving a trade. I use the bigger time frame to see the overall picture, and I move down to as my daily, my 4 hours, and my 1 hour's time frame to bring out my trading setup. Then I move down to my 15 and 30-minute time frame to go into the market and to exit the market. So that is the way I streamline my time frame towards my entry time frame. So that is the time frame. It depends on the kind of strategy you are using and the kind of trader you are. Are you a string trader? Are you a day trader? The third thing to talk about is the strategies. You must have a working strategy. Having a strategy is not the main thing, but the main thing is to have a working strategy. If your strategy has not yet been backtested, trusted, practiced before utilizing it, you shouldn't call it a working strategy. You have to go through these steps to make sure, okay, you've done the needful before you can call this a working strategy. And your strategy has to give you more wins than losses in the market. I believe on a strategy that surrounds trending markets. That is following the trend. That is what I do. I follow the trend of the market and I use price action. So I use trend following and I use price action majorly. These are the two strategies that I use in trading. Now, then for the conferences, I have my conferences also that surrounds this strategy that I use, the trend following and the price action. I will go onto the chart right now to show exact things that I'm talking about. how I've been able to put all this into practice and how it's working for me. And I want to show, just for educational purpose, this is what I do and I'm trying to share. If you think it's something you can use, fine. I'm not guaranteeing anything on this strategy, but I will show how I use it and how it has been working for me. So the very first thing, let's go onto the chart. So the very first thing we are seeing here, as I said earlier on, I said on the time frame to use. I use the daily, the 4 hours, and the 1 hour for my setup. Then move down to the week, the 15 or 30 minute time frame for my entries and exits. So, but before I start working on the daily time frame and the 4 hours and 1 hour time frames, what I do is I go on the monthly time frame to see the bigger picture of what the market is saying. And at this point, I'm going to like identify some important structural levels. As we can see from this, from the screen right now, the picture you are seeing here shows the market is a bearish market. The market is falling. This is what I'm seeing here. The market is falling. So the very first thing I will do is I will identify the major levels that I can see on my screen right now. So the very first one I can see here is these two points here. These 2 points here. These 2 points here is the first thing I can see. And if you look far left, you can see that that level is also being respected like so many times in the past. You can see we have it tested here, tested here, tested here, tested here, tested here. That shows this level is a strong level. Once price gets to this level, just be watchful of how the market is going to behave at that point. Because once price get there, there's high tendency is going to hold up that structure again, or if it breaks it, then continue the bullish movement. Then the recent one I'm going to look again, I'm going to see again, is this one down here. This structure down here is the recent one I'm going to see again. So these are the thing I'm seeing currently on my chart on the monthly time frame. This is the recent thing that is happening. But if you want to go further, we can outline all these. You can see this level 2 here is a very strong one also. You can just pull this one here. You can see we have it tested here, tested here, tested here, tested here too. You can see. So these are the things that I do on the monthly time frame. Once I'm done with this, I know that okay, once price gets to these levels, I know what to do. I will just listen to what the market is saying at that particular point. Then I will take my decision afterwards. So this is the thing I can. These are the things I can do on the higher time frame for now. So I would then go down the line to the lower time frame to see other things that are happening. Though there's a trend line here too. I can see this I can call this a trend line. So you can see massive. You can see we have first touch, second touch, the third touch is happening already. So the month of August is bearish. Month of August is bearish. White July was the candlestick that tested the trend line for the third time before the bearish movement. Once price tested this for the month of July and closed with rejection, the following month should be closely watched to be a bearish movement, a bearish month, and that is currently what is happening right now. And today is 25th of August. We have 6 to 5 days before this month ends. So that is how the market moves. So these are the things I can see on the monthly. Now let me go down the line to the daily to see recent things that we can trade with. Now, as we can see, the trend is dropping. The market is dropping massively. You can identify some key levels on the daily time frame too. I have key levels here that I'm going to identify again on the daily time frame. As you can see, we have levels here. We have a level here being tested here, tested here again. This high tendency price got when price gets here is going to respect this level again before it takes on any decision. Now, this is what I am looking at currently, and we can see again. What can we see here again? We have a structure here also. This is what I'm talking about. The levels, price action is the key. We have a structure here. We have a structure here. We have these 2 points that define this level, and we have it respected here, tested and moved. Then again tested several times here. So the daily time frame is in a very tight situation right now, because you don't know what is going to happen today. Today is Friday, and let's see how this candlestick is going to close. If this candlestick should close below this structure, that means we are considering the what the bearish movement. But if by chance this candlestick closed bullish and give us some kind of candlestick confirmation, we know the market is about to take on a bullish movement. So these are the things that I do on the bigger time frame before going down to my 4 hours. Then again, I think I'm seeing a structure here also. Let's see how price is going to react to that level. If the market gets there, let's see how price will react to that level. But for now, this is what I'm seeing on a daily, and let's go down to 4 hours. So on the 4 hours, we can see that the market is bearish. It's clear that the market is bearish. Now, since the market is changing direction to a bearish, it's continuing that bearish movement. So I move closer, I zoom my chart, I bring it up, then I draw my recent trend line. This is the recent trend line that I'm seeing right now on the 4 hours. This is the recent trend line that I'm seeing right now on the 4 hours. This is what I'm seeing currently. If price did not get to this place, I won't do anything on the 4 hours. Now let's see the 1 hour. Is there any inner trend line? Because the major trend line is from the monthly. I think this is the monthly time frame trend line, and this is the 4 hours. And let's see the 1 hour. Is there anything on the 1 hour currently? Yes, we have. If we can zoom this, we have. This is another trend line for the 1 hour. And this was the trade we took yesterday. I took this trade yesterday, and it was a very massive one. Though I closed the trade very, very early, but on the long run, the market, you can see how the price just crashed into the structural level. Now, this is how I was able to derive how I entered this trade yesterday. And let me see if I can show the screenshot of the trade. Yes, I have the screenshot here. This was when I entered into the trade yesterday. I pulled in at this particular level, and the market was going in my favor. So I was able to bring another setup for me to go into the market again, but that didn't trigger. But okay, this was when I entered initially, and this was what I was expecting. This was the trend line I was showing right now. I was expecting price to drop from this level, then I go into the market. All what I do is I don't just jump into the market, into the trade. I wait for confirmation, because I have my levels defined. I have my point of interest where I'm so interested in taking my trade. So I'll wait patiently for price to react to that level. And if I see the confirmation, the price action that gives, okay, guy, this level has been confirmed to be a strong level, then you can go into the market. That is only when I go into the market. This was the first initial view before I took the trade. Then this was when the price action showed me, okay, there is a momentum right now. This was when I entered the trade, and I was expecting price to actually get to this level. But something came to my mind to be careful about this movement, but there's high tendency for price to move back. That was why I have this second setup here for me to go into the market. But look at what happened. After the price didn't trigger on this level, another setup came into place. Then I was very concerned about this. This GZ is the golden zone. That is the Fibonacci retracement level that I use. I use the 5061 level to define my golden zone for my Fibonacci. So I look at the price at that particular level and I see if I see some kind of rejection or price trying to react to that level, I close my trade. So that was what I did yesterday to close this trade, but the market later crashed down into the daily structural levels, then fine. But at least I was able to go out with something very reasonable yesterday. So it's fine for you to have a strategy that is working for you. It's a very, very, very good thing for you to have. Once you have a strategy, you've already defined your strategy. Have you back tested it? Once you are done with that, have you tested it yourself? Run it on a demo account to see how it's going to work. Once you have it running fine for you, then you can use it as your confirmed strategy. So these are the things that I do and how I was able to move from the bigger time frame down to my entry time frame step by step. If I'm trading this trade and the price gets to this level, I hold on to see because these are levels that have been defined on the higher time frame. I hold on to this level. I watch out on all these levels to see how price will react. It might look so simple, but it requires a lot of sacrifice and time before you can get it done. You will get frustrated sometimes. You get so tired sometimes. You get so sick about it sometimes. But the only thing that will keep you moving is for you to have this positive mindset and you believe on what you are trying to achieve. So that has been what has been making me to focus on this forex trading journey so strictly. So I'm not a pro trader right now. I'm still also learning. I'm still trying to build myself on forex trading. But this is the way I see the market, and this is the way I view the market, and bring out some content for anybody that might need it and be profitable with it. If you have your working strategy, please stick to it and make it work perfectly for you according to your lifestyle, according to your view about the market. So that will be all for that. The last thing I will talk about is risk management. You have to know the amount of money you are exposing to the market. If you are having a $1,000 account, you should know the amount of risk you are taking per trade. You should know the amount of risk you are taking per day. And you should have a target profit. If all these are in place, you know how to. That means your risk management is intact, is very, very good. So that will be all on this very much topic today, and I'll be giving out most content on this video on this YouTube channel.